It's Monday, July 26th. I'm your host, Jason Moser, and on today's financial show, we're diving into the world of real estate. To do that, we're going to none other than our lead advisor of Million Acres, Mr. Matt Argersinger. Matty, it's been a while. How's everything going?
It has, JMO. Things are good. Things are good.
Good to hear. Good to hear. Well, Matt, let's just jump right into this because real estate has been a hot button topic here over the last year. 2020 really seemed to create a unique environment for real estate investors, and that has really, I think, bled into 2021. And it seems like this is something that's going to be around for a while. I noticed on your Twitter feed several weeks back, you tweeted out a link to an article where Blackstone president Jon Gray was talking more about the opportunities he sees in real estate. Now Mr. Gray he's got a reputation. He's quite a good real estate investor, right? You had
Certainly
some takeaways. You had some interesting takeaways from this article that spoke to the state of real estate today. What were some of those takeaways?
Sure. Well, I think everyone today, when they think about real estate, they immediately think about the housing market and how it just seems, starting kind of like you said, kind of 2020 and really going into 2021, we're just in this really unprecedented, historically hot market for home buying. And it's really just pick a market. And it seems, house prices are way up. They're not lasting on the market very long. In fact, I saw a statistic the other day that 50% of the houses that were listed this year in the U.S. have sold in less than a week.
I believe
and that's across the country. So Imagine that. So the inventory levels are extremely low in every market. Demand is huge. And of course, you start, you and I as investors, but a lot of people I'm sure are thinking about back to 2005, 6, what is this looking like? Is this looking like another housing bubble? I mean, after all,
feels like it rhymes.
It does. I mean, and if you looked at home prices, I think the latest data in May, they were up 23% year over year for existing home prices. I mean, that's a huge year over year gain. But it's different. And I think one of the points Jon Gray was making in that article, he's a smart guy, is, sure, it feels a little bit like 2005 to 2007, but it's not actually a bubble yet, at least. It could certainly blow into one. But if you think about today versus back then, the demand is real out there. I mean, they're just, people that are desperate to get into homes. They're at the right age. The millennial generation, even the Gen X generation is sort of in those peak home buying years, and they're desperate to become homeowners and stop being renters. So the demand is real, but what you have today is a real almost supply shock, because we spent the last decade or so underbuilding homes to the tune of several 100,000 homes a year. So you could almost make the argument that there should be 5 million, if not more, homes in existence today than there otherwise would be. But there wasn't, because we underbuilt homes for so many years. And so there's just a real lack of supply. And then, of course, now, recently at least, we're talking about construction costs are high. So it's expensive to build homes. It's expensive to renovate homes. People are staying in place because of that. And so that just sort of exacerbates the supply problem. So I think I look at today and I see a real demand supply issue rather than a bubble that we saw, 15 years ago now. But and one of the other differences too is that if you look at the credit standards, I don't know if you've refinanced a home lately.
We did, we did recently, and I tell you, we had to jump through a lot of hoops for two people with full-time jobs we've held for a while, and really, I would say excellent credit. I was surprised at how much work we had to do just to get that done.
It's a lot hard. Same thing. My wife and I went through refinancing last fall, and it was pretty arduous. It took months. I feel like I signed over 1,000 documents in my life to get this home refinance. And same thing. I felt like we have pretty good credit, so you can just imagine how tight the lending standards are out there. And then homeowner balance sheets are in good shape too. There's a lot of spending in power, a lot of savings, and so it doesn't feel, to me at least, like the bubble of 2005, 6, or 7 that led into, of course, the Great Recession, this crisis that we had 15 years ago. It feels a lot less like that than it did back then.
So let me ask you, when you said earlier that the demand is real, in the way I hear that, the way that translates to me is that's different than what perhaps we saw years ago. Really, it was very speculative, right? So you're thinking that what's going on right now, this is people who are looking for homes to live in as maybe not as much on the speculation side. Is that right?
Yeah, exactly. I think if you go back back to the old housing bubble, you had a lot. Yeah, you had speculators, you had home flippers, you had people with very low credit buying multiple houses. There was just a lot more speculation going on. You don't see that as much today. You do see a lot of cash buying, and you do see a lot of institutional buying of rentals. That's a little bit, that's sort of in the headlines as well. But no, this is to me, this is real demand. The data that I'm seeing is you have people who are moving to cities, moving to places, especially places like Texas and Florida, other top destinations. They want to live in a home, and because of the pandemic, also people are also flocking to single family homes versus your traditional condos or apartments, and so that also is creating a huge demand that is not, of course, being met by the supply.
So you noted Texas and Florida, very understandable, and that's certainly something we've seen throughout the headlines there. Another thing we saw throughout the headlines, it certainly was a major theme, I would say, in 2020, but I'm not so sure. I feel like it was maybe a little bit knee-jerk. What is the state of the major real estate markets, the major markets like New York City, San Francisco, places like that have historically held up, have had valuations that are absurd to some, maybe. But I mean, is that exodus really materializing? Because it doesn't feel like it is.
No, I think that's been way over exaggerated as well. You read headlines, people are leaving, flocking away from San Francisco, leaving New York City, leaving Los Angeles, and heading to, everyone's moving to Austin, Texas, it seems, or Miami, Florida. There is a certain extent to that. I mean, there is certainly a net migration going on in a lot of southern states, Sunbelt states. But places like New York, San Francisco, they're always going to have a lot of demand, especially from younger people, younger workers who want to live in really dynamic markets with all the amenities and all the culture and entertainment and educational opportunities that those cities have. And so I think that's way overdone. I mean, I think there probably might be a little stagnation, and maybe home prices or apartment prices in those markets have to come down a little bit, but that's okay. I think there's going to be no problem there in the long term. I think that's been over exaggerated. Now, what is interesting though is you will look at things like U-Haul data, which puts out some interesting reports about where people are moving, and
oh, yeah.
there's no doubt that the southern states, Texas, Southwest, Arizona, there's definitely a magnet for people to move there, and part of it is, there are attractive job opportunities. Taxes are lower. Home prices are lower, so it's cheaper there, to live there. Definitely reasons why people are moving there, and will probably continue to move there. But don't sell places like New York, San Francisco, Boston, or Washington D.C. even where you and I live. Don't sell them short, because these are still pretty big destinations as well.
Yeah, I'll tell you, living up here in Northern Virginia, I can tell you real estate has held its own up here. It's done okay.
Oh, it sure has.
Oh, man. What about frequent listeners to the show know that we talk a lot about REITs, real estate investment trusts. How do you feel about real estate investment trusts today? I mean, is that an opportunity out there for investors today, or is that something that's still more uncertainty than is worth taking a chance on?
No, I mean, I thought coming into 2021, I thought I was really enthusiastic about REITs, and if you looked at coming into 2021, REITs had kind of underperformed for the last 5 years. And that's just unusual. I mean, REITs have historically been really great performers, held their own against the stock market, with very much less risk, I'd say, than your average stock. And the fact that they had underperformed so much, and then, especially late 2020, you looked at some of the valuations in the REIT market, and, either on the retail side or hospitality side, but office as well. It's just, there were a lot of quote bargains I saw in the REIT space. And so I thought, I think I even tweeted this, coming into the year, that I thought REITs, or the real estate sector of the stock market, was going to be a top performer. And it certainly has been, at least through this sort of first half of the year. It's if you look at the Vanguard Real Estate ETF, VNQ, last I checked, it was up 25%, I think, year to date, which is outperforming the rest of the market. But I still think there's plenty of opportunities in REITs. I think they're well overdue to have some nice outperformance. You get great dividend yields. You got a situation where in 2020, a lot of REITs sort of they either pause their dividend or cut their dividend. they're bringing those back, and rent collections are coming back on the office side, and on the apartment side, there was concerns about higher vacancies or people not paying rent because of eviction moratoriums. Those things are kind of being phased out, and so a lot of the income that was lost by REITs in 2020 is coming back in 2021 with a vengeance. Especially if you look at the industrial or data center side, they never fell off in 2020, and they're just doing even better in 2021. So across the board, I think with REITs, you can find a lot of opportunities even today going forward.
Let's talk a little bit about the dilemma with office real estate, because this has been a conversation that's been going on now for the better part of 14, 16 months as the nature of the workforce continues to evolve. For all of the certainty, I would say, we see in residential, it feels like commercial is just the polar opposite. How do you feel like, this work from home trend, it feels like most companies are going back to work and they're incorporating the hybrid models, right? Which is, you've got an office you can work at. When you need to work at home, you can work at home. But they're trying to go with that hybrid model, which has been so successful for so long. And it does afford some freedom there. But how big do you think that trend is going to be? And how does that play out on the commercial market?
Yeah, I think you're exactly right, Jason. That is probably the model. I think the hybrid model where, employers are more flexible, employees embrace, more flexible scheduling. You have an office destination where maybe you go a few days a week, but you can also do some work at home or in other destinations. That I think is going to be the predominant model. Now, there is concern there, though, right? So let's assume that's the model. Then what does that mean for office demand? Because there's millions and millions of square feet of office that's empty right now, that are leased by companies with the intention of, their employees they're eventually going to come back to these offices, right? Well, not so much, certainly probably not on a 100% basis. And so what does that mean for the demand for office? I have some serious concerns. I think, I don't think it's completely one-sided where the work from home trend just takes over and most corporations are letting, 90% of their office workers, do whatever they want, work full-time from home or, just come in for one day a week. And I think it's definitely not that, but it's also not where, people like Jamie Dimon from JP Morgan saying, "Oh, I want everyone back," or that's probably not the model either. So It's definitely somewhere in between, just like you laid out. My question is, and I'm still trying to figure out, and I hope there are smarter people than me that have the answer. I'd love to know. But what is the ultimate effect? Because I think you can look at the office REITs or office real estate opportunities, and you can see some really great opportunities. You're talking Class A property in places like New York City or San Francisco, the two cities we talked about, or other places, and you're saying to yourself, "Wow, that's some really incredible, unique, one of a kind real estate." But wait, are employees going to come back to that? Or are there different things that can be done with that office real estate? Can it be converted into apartments, which is also happening? There are so many questions about that, and it makes you want to be interested in office, but also just want to stand back and say, I need to let this marinate, so to speak, for like the next 6 to 9 months and really get us past this pandemic. Hopefully this Delta variant, is not as, of course, severe as the overall pandemic was last year, but once we get past all that, what's left? And so that's the big question. I think office is one of those ones where you just kind of stand back and see what happens.
Yeah, I think that makes sense. So traditionally, of course, real estate, it's been seen, I think, by most people, it's been an investment available for the few. There are just plenty of sort of barriers to entry. You needed all sorts of capital to really be able to participate in investing in real estate. And as time has gone on, that has really changed. We've seen more and more vehicles come to market that open up the windows of opportunity for investors to jump in on real estate investments, whether that's crowdsourcing, whatever it may be. But we're also seeing, clearly in the public markets, there are all sorts of opportunities. And hey, listen, at the end of the day, we're stock investors, right? I know you're working at Million Acres and Mogul and all that great stuff, but I know in your heart, Matty, I know you're a stock guy. We worked together long enough.
You know my soul. You know it. You've seen it.
I do. What I wonder, what are some of the interesting, what are some of the opportunities in the stock market today that you see for investors? Because some you look at home builders or home supply companies, right? You're looking at something like a Home Depot and think, well, that's going to be a way to participate. But I mean, there are all sorts of different options for investors interested in real estate space today to take place in the public markets. What stocks have you got your eye on these days?
Sure. Well, let's stick with REITs because I do think there are some great opportunities, and it's where I spend a lot of my time these days. And so I think there are three in particular that stand out to me as they've had really great 2021s, but I see plenty of opportunity ahead for each of these. And so the first one is Invitation Homes. The ticker is INVH. I'm sure it's something that Matt Frankel, your partner in crime, has talked about before. But there is a groundswell of demand for single family rentals on the retail side, on the institutional side, and the market is so fragmented still. There's something like 17 million single family rentals in the United States, and most are managed by idiot landlords like me. My wife and I, we have a few rental properties, and you've had rental properties in the past, and that is really that's 99% of the market. But the institutionalization of it is just sort of nascent, just sort of getting on. And Invitation Homes is the first publicly traded quote SFR REIT that's really gained scale in the market, and I just feel like they have so much upside. Operationally, they're so efficient, and what's exciting to me is if you look at their business over the years, each new property that they add to their portfolio is incrementally more profitable to the company. And I love when companies can scale like that. And so I look at Invitation Homes, they've got 80,000 single family rentals in their portfolio. That could easily go to 200,000 or 300,000, 500,000. And what that's going to do is it's going to 5 or 6x their net operating income over the coming years, I think. So that's my first opportunity in the residential space would be Invitation Homes. My next one is EastGroup Properties. The ticker is EGP. That one might be less familiar to your listeners, but industrial is a fantastic place to be investing. I'm sure you guys have talked about it, but just the rise of e-commerce, especially since the pandemic, and the need for warehouse space, more fulfillment space, especially in places like the Sun Belt where EastGroup tends to concentrate. 60% of their income, I think, is derived from Texas and Florida, where huge population increases. People are moving there. They're going to be shopping more online, especially the people supposedly fleeing from San Francisco, New York. They're going to go down there, order things online, order fresh food, and and take out and things like that. And that you need a supply chain and the logistics and the warehouses and the cold storage to do that. And that's EastGroup Properties right there. The last one is probably one definitely a lot of your listeners have not heard of. But if you want to play office, here would be my way to do it. It's called Easterly Government Properties. The ticker, it's a really appropriate ticker. It's DEA. And the reason is they are 99% of their properties are federally leased properties. So the DEA is one of their big tenants, FBI, FDA, the Veterans Affairs, basically your alphabet soup of government agencies. So their focus is on federal government buildings. Obviously, Uncle Sam doesn't really default on his lease. He's always going to pay his rent. So, you've got a really
vouch.
Yeah, you've got a steady tenant base, of course, AAA. And what I love is they Easterly focuses on what they call mission critical agencies. So they're not just going after any government agency who needs office space or a building. They're really focused on, DHS, FBI, where these agencies need real estate. They can't work from home. They have to have places to go to do things like forensics labs or investigative work and or treatment like at a VA hospital. It's all essential mission critical work. And so that's where Easterly Government Properties focuses on. They have a great their dividend yield is almost 5%. This is probably the sleepiest REIT I know. I mean, it's definitely not going to be a multi-bagger, but it's one of those ones where you could probably earn a nice high single digit return and sleep well at night, and it's a nice way to play office if you want to do that.
I love it. Yeah, I mean, I have not heard of that one. I mean, certainly living up in this area, you and I know the presence of the federal government, and I mean, yeah, you said it, mission critical. I mean, so much of that stuff, it's those aren't folks that are working from home. That's not an option, and that's going to be very reliable. And so yeah, there's that little bit of a trade off there, and it's almost as reliable as the sun coming up. So you're not going to get the same return, but you are going to be able to sleep at night, and it sounds like it could hold a nice spot in a well diversified portfolio. How come Matt, Matt Frankel, you work with Matt all the time. How come Matt's not bringing that to the show?
Hey, Frankel's a genius, but even he misses some good ones here now. So,
well, speaking of working with Matt, and speaking of everything that you've been everything you've been doing there with Million Acres. I mean, it wasn't that long ago when you and I were actually talking about the build out of Million Acres. I mean, I think we did a show on it right when you got things going. You're building our real estate business here at the Motley Fool from the ground up, and I knew when you started, they had the right guy for the job, because I know your enthusiasm for the real estate space, and to see what you've built up with this service has really, really just been fun to watch, because you have so much to offer now. It's not just Million Acres. I mean, you got Mogul, you got Real Estate Winners, all sorts of stuff. Remind our listeners, let's talk just a little bit about the services that you have going on with Million Acres today, what you guys are doing there, and anything in particular that really has your attention.
Sure. Well, thanks for those kind words. Yeah, it's been definitely been a labor of love over the last roughly 2.5, 3 years now. But we have millionacres.com, which is a free site. It's very much like Fool.com. You can go there if you're interested in reading investing articles on real estate or home renovation articles. It really covers the gamut of real estate. It's all free, and there's even a great ebook that we have there that you can get. I think it's like 50 pages. It kind of introduces you to real estate investing. It's a great resource. So we have millionacres.com, but then we've got three premium services that members can subscribe to if they'd like. It's Mogul, which is the one we first started with, and that recommends publicly traded real estate stocks and securities, but it also recommends private commercial crowdfunded deals. And so, if you're an accredited investor and you're interested in investing in private real estate directly, that's we got you covered in Mogul. Then we've got Real Estate Winners, which is on the sort of opposite spectrum. I like to call it the stock advisor of real estate. But I work directly with Matt Frankel, your partner on that one, and we come out with at least one new recommendation per month in the public markets, either REIT or real estate stock. And it's off to a great start. It's coming up on its 1 year anniversary in September. And then just recently, we launched Real Estate Trailblazers. I don't work directly on it, but it's another service that we have under the Million Acres umbrella, where it's really about the marriage of technology and real estate. Some of the big trends that we're seeing, whether it's e-commerce like we talked about, or like Sunbelt migration, just some of the big trends in real estate. What are the companies that are sort of driving those big trends and leading them? That's what you'll find in Real Estate Trailblazers. And so we like to say we got people covered, when it comes to real estate investing. But I'm sure there's always more ideas and more things to do in real estate. It's a massive asset class, and I'm excited that we were able to sort of bring it into the Motley Fool a few years ago, and I hope it really continues to grow.
Yeah, well, it sounds like it's been a very positive response thus far, and I certainly understand it. I mean, if you've owned real estate, if you own a home, I mean, you see the doors that opens up for you, and there has just been so much wealth created in the real estate market here over the past several years. It's something we definitely need to get out there on our investors' radars more and more, and you guys are doing a wonderful job at that there. So thank you for doing that, and thank you for taking the time this week to join us and give us the lowdown here on real estate, because this is an opportunity that we don't get to talk a whole heck of a lot about, but we do like covering it on this show, and really to dig in with you today was a lot of fun. So thanks.
All right, thanks, Jason. Well, it was a great pleasure, and always happy to be on.
Well, you can always learn more about what we're doing here in regard to real estate by just going to millionacres.com. That can just launch you to all of those different services Maddie was talking about there. And hey, listen, follow Maddie on Twitter at @margersinger. That's MARGERSINGER. Margersinger. He's always got great real estate tweets going on out there. You learn a lot from him. And remember, you can always reach out to us on Twitter at MF Industry Focus, or you can drop us an email at industryfocus@fool.com. As always, people on the program may have interest in the stocks they talk about, and the Motley Fool may have formal recommendations for or against, so don't buy or sell stocks based solely on what you hear. Thanks as always to Tim Sparks for putting the show together for us. For Maddie Argersinger, I'm Jason Moser. Thanks for listening, and we'll see you next week.